Hi everyone, good afternoon. My name is Kate Almond, and today I want to give a short-term outlook on the market and document some of my thoughts that are going on. So, as always, this is obviously not financial advice. I don't hold any financial degrees or certificates or anything like that formally. So always consult a financial advisor before making any important financial decisions. And you should consider this basically speculation and not facts, I guess. And then before we start the video, I want to thank Benjamin Cohen. It's one of the best minds on YouTube. You can see his YouTube page here, Benjamin Cohen. He's a great guy, and I'm really trying to get into a lot of his insights that he has in his videos and try to articulate them in more of a shorter format to hopefully kind of show some ideas that has been on display. So thank you, Benjamin. So with that out of the way, well, what is in store for the S&P 500? What do I think is going to happen? So I have the chart of the S&P 500 right here, and we're going to take a look at the recent price action. You can see this is what the S&P 500 has looked like for the past 10 years. So this is 2016, and it's made a pretty good return from, 1.8 thousand to almost $7 grand. Pretty astonishing returns. Actually really good. But if we kind of look, we can see at least I can see a pretty scary pattern forming. So, which is this recent price action. So if we look at the price of the S&P 500 a year ago, last year in November during the elections, last November, which is not the elections, I'm sorry, excuse me, we can see the price was at 6,800. And we see the current price is actually below that at 6,700. So it's been, 4 or 5 months where the S&P 500 essentially hasn't moved at all. And for those of you who are not familiar, the S&P 500 is the top 500 companies in the U.S. condensed into a singular stock. So if the S&P 500 isn't moving, well, it means most things aren't moving. Most companies aren't growing in the U.S. And for stocks to, for you to invest in stocks and make money, the company has to grow, the one that you're investing in. So if we see that the top 500 companies really haven't done anything for 4 or 5 months, that's usually something to look out for. And so if we kind of just formally draw this, let's draw this out. It's kind of what it looks like. Can you spot anywhere on this graph where you've seen similar behavior? Well, it shouldn't be too hard to see, but if we see over here, last year we almost saw this identical pattern play out where, this started in November, but we can see in December, Bitcoin for a few months, didn't really do any. The S&P 500 hasn't really moved anywhere for, 3 or 4 months, and decided to just plummet down. And I just think we're going to see a repeat of that. And, some other instances where this has happened, if we go back and look, we can almost see this exact same thing. November doesn't do anything for a few months, the S&P 500, and just goes down. This right here is COVID, so I like to kind of ignore this because this is not usually representative of what usually happens during the S&P 500 during normal market conditions. But even if we go back and look over here, let me zoom in really fast. Over here, we can see a similar pattern of behavior where Bitcoin, the S&P 500 doesn't do anything and just proceeds to crash. Another instance of this we can see right here. And if you look, it's still the beginning of the year where this usually happens, where it's usually, this whole process starts near the end of the year, going into the beginning of the year, or it starts at the beginning of the year and it goes into the midway of the year. So we can see February, the S&P 500 doesn't really do anything, and it just gives out. The last thing we'll look at is, you can look at over here. Same process playing out several different times. So, kind of over there as well. But yeah, I mean, I feel like the pattern is, to me, seems to stick out to show that the S&P 500 probably is not in for a good time for the next few months, maybe. I mean, if we look over here, it took until April for the stock market to completely crash around 20%. I would say we've been really crashing since kind of over here. So, I mean, for the next few months, I would kind of expect there to be a good stock market crash. And kind of the tricky thing is okay, let's say we know that there's going to be a crash. Where do we know, or the best time to, sorry, I was trying to undo, I'm trying to get rid of some of these drawings. But where do we invest in? Like, obviously, I think the market has a strong possibility of going down. And, the golden rule of stocks is buy low, sell high, right? So where would we buy at? The only possible thing I can kind of think of is you look over here, we can see Bitcoin, the S&P 500 happened to kind of bottom, hit a low price of where it was sort of in the last year. And for that process to sort of happen again, I would expect like this kind of a drop somewhere within here, the S&P 500 to drop into. And this would be a really good kind of opportunity to buy stocks if you wanted to. And it's due to this pattern that I've been seeing out here that we just discussed. So obviously, S&P 500 looks like it's in not a great place, but most people would be sort of scared of this news. But I think if you kind of have this expectation going in, and if we see this pattern play out, I think this is going to be a great place to invest. Because, I mean, if you invested, sort of at the bottom of here, I mean, look at that. You would have been able to ride this up almost 80% in the span of a year, which is pretty phenomenal. I mean, like the average stock goes up like 15%. I mean, if you're able to sort of buy right here, I mean, you went up almost 80% in a year, but with the caveat that basically the S&P 500 hasn't really done anything the last few months. But, this has been sort of an amazing opportunity, and I think it's going to present itself again. But, I mean, if there is an expectation that, okay, that S&P 500 is going to go down, well, what do you really do in the meantime? And here I'd like to share some thoughts. So, with the S&P 500 is kind of what might be good, more attractive assets to sort of invest to wait for an opportunity like this where we can buy in lower. Like I discussed, I think it would probably go somewhere into this range, but it's sort of hard to say. I mean, I can't really predict this. I don't have a golden ball. I can't see into the future, but this is sort of my expectation. But do you just sell all your money here? Like, what do you do in this time frame where it's S&P 500 is going down? Here are my thoughts. So we have kind of one stock, which is XLE, which is basically an accumulation of energy stocks that the U.S. has. The orange one is XLE, the energy stock, and the green one is the S&P 500, so the top 500 companies in the U.S. If we take a look at this, though, one thing is that I kind of want to point out is, the XLE stock has been going up drastically for the last few months. If you look at the S&P 500, I mean, it's kind of been slowly bleeding out. Kind of another thing is if you look at this whole situation, where the last time we saw one of those patterns play out, I mean, the XLE actually was going up. And you can kind of see that, while the S&P 500 kind of broke even right around July 2025, XLE was actually up, as you can see here. But a more interesting note is, let's kind of zoom into this place. So if you just follow my mouse here, the S&P 500 is going down, whereas if you look at XLE, it was up right here. It was break even. It was actually making money, which you could have sold all of this stock if you knew this was the bottom and then transitioned from XLE into the S&P 500 and then rolled this entire wave up. Some important exceptions to look at is this is a COVID drop. Obviously, both of these stocks went down, and so that's sort of tough to look at. And another thing to look at too is like the S&P 500, skyrocketed over here, whereas XLE really did nothing. And then while these stocks both dropped, this looks like a smaller drop right here from XLE, but actually, surprisingly, these are actually the same percentage drop. So even though this one looks like a bigger drop, in reality it isn't. But I guess something to note is that like there are times, this is what I'm trying to articulate, there are times where the S&P 500 is kind of tired, and when it's about to drop, it goes and drops, but XLE actually continues to grow during some of these uncertain times, is the message I'm trying to get across. So if you see this pattern playing out in the future, this is kind of that would probably be the optimal move. But one thing you should note here is, why is XLE going up right here? Why is it going up? That might seem a little strange, and there's a few reasons. Obviously, this is an energy stock, and so as the population of the U.S. grows, energy becomes more valuable, and we either energy becomes more scarce, so therefore energy is worth more money, or we build more sources of energy, and as we build more sources of energy, we use more of them, and we pay for more of them, which means the stock goes up. So this is a relatively safe stock to put money into for that reason. But really, why is it going up here specifically though? And I would articulate the reason why it's jumped so high is because of the price of oil, which is an energy resource with recent conflicts in the Middle East. So that's why you see this skyrocketing. It's a little tricky to, probably not a great idea, I don't know, to buy this right this very moment, because it's gone so high that, it might be a little dangerous to buy right now and then experience one of these huge drops that we sometimes see with energy. But that's kind of stock number one I wanted to discuss. Number two is, this is sort of a Bitcoin stock. It sounds a little funky, and I'll talk about more about Bitcoin on this channel, but it's called SWCARY. So we can go to Google here. We can look this up. But if we look at the stock for XLE, for SWCARY, it looks a little funky, but basically it grows at a very consistent rate, as you can see here. And really the idea of this stock is that it just pays an 11% dividend. So you get almost a 12% guaranteed return while you're in the stock. So the stock kind of stays flat, but you're getting a dividend for holding the stock. And basically, what ends up happening is the stock goes over $100. Well, what the owners of the stock, they're just going to sell off all the value that's above $100, and they'll put that back in the dividends. So it's just a safe, reliable stock. So instead of having to stay in the with the S&P 500, instead of just having to write it down, you might be able to invest in SWCARY for the next few months, and at least you get a small little return where you can then just buy in at the bottom for the S&P 500. So this is super safe. But the only concern I have is you don't really see stocks given 11.5% dividend for a reason. So I would be a little careful with this stock. I mean, this number seems, this dividend yield is a little too high. Raises some alarms for me, but I think in the short term it could be a possible good alternative, and perhaps you can actually buy a little bit of XLE, a little bit of STRC, and go that way, diversify a little bit. Last stock I'm going to talk about is actually gold. There's a few notable observations. So, I mean, one obvious observation is that while the S&P 500 decreased here during COVID, we can actually see gold went up in value there. We can see as, you know, the S&P 500 completely crashed over here and took several months to recover. I think more than a year to recover. I mean, if we look at gold during the same time frame, you know, S&P 500 is barely broke even. Gold is up actually quite a bit during the same time. It recovers faster. This is the point I'm trying to say. It recovers faster. And let's see if I notice anything else. I think the only other thing was like basically over here, whereas we see that market dump again. And actually, you know, during that same time, I mean, gold is going up. It's clear to see. So, you know, gold can also be a pretty good alternative in these situations where we know, if you absolutely know the S&P 500 could go down, historically, gold has kept a lot of its value. And actually, not only has it kept its value, but it's recovered faster in a situation that's gone down than compared to the S&P 500. So, with that being said, that's really all I had to discuss today. Just to recap, you know, for the last few months, the S&P 500 hasn't really done anything. And that is a pretty concerning pattern, because every time we see this pattern play out, I mean, the S&P 500 tends to crash quite a bit. So yeah, I hope everyone found this helpful. I think next time I discuss something, I want to discuss a little bit more about Bitcoin. Thank you so much for watching my channel and video, and have an amazing, wonderful day. Thank you so much.